Hello, YouTube. Is the S&P about to rally or stop going down? Which is a very simple way of looking at this downtrend and the seasonality chart, which now we're going to look at and note that as we connect the highs for the month, or as we're about to complete the pattern for the month of August, which is going to happen on Thursday, are we actually going to break it? Are we going to lead to a W, which goes higher into September? That is a very simple story. Let's look and see if that can happen now. Well, it looks pretty simple here. So we have the potential W in the making. By just going sideways, we're going to get a little bit more confirmation. And as we zoom out to try to look at the wider pattern now, this is very important because we note that previous resistance is turning into support, which is found at about 430. We remain above key weekly highs, but there's this pesky pattern, which is a head and shoulders in here. So we have these big green uptrends that show that we're pointing higher, but right now we have this head and shoulders. But before we get there at 445, roughly, we have to get through this 443.50. So here's the part that's really interesting, and I want to give a shout out to Habib for this right now, because when I look here on the daily chart, the trend could not be more obvious. I'm really happy you pointed it out. It's just the downtrend. If we zoom into the 15-minute chart, it acted as the perfect rejection area. And right now, we're putting in a small W right around that key downtrend, which is this red line right here on a shorter candlestick. So what this tells me is that a lot is at stake right now. If we look here at the weekly chart, we've now had our 5% dip, which means a move back down to the white line. We went down a little bit further to where? To support, which is that 432 area we talked about. So what was resistance is turning into support, and that's usually a bullish sign. We're down by 5%. And now the question is whether or not this dead cat bounce, which is currently inside of a weekly inside bar, which way is it going to go? Is it going to go up or is it going to go down? The direction of the break is likely going to be the short-term trend, which means if we break bullish, we're probably going up. If we break bearish, we're probably going down. Is that a guarantee? No. The low here from last week, exactly 435. We make it down to 434s or back above 445. It's basically a 10-point range over 445 or below 435. That's likely going to be the short-term move. So that seems really simple. One more chart. Why? Because on this chart, we like to look at stocks today, and we like to look at charts. Here we go. So this is going to be our monthly chart, and here we're looking at the pattern from the yellow box. We went over this on the weekend, so stay tuned till the end if you want to see that video. Anyways, we're looking here at a failed breakdown, which means there is a part where the chart breaks. We go to a lower low, but then by the end of the month, we suck back up, which means we actually close below the previous low. There's a break, but they fail to hold it down, which means it's a failed breakdown. So we break down, but fail to hold it. And then we have a inside bar. So inside bar, and then we get a bull break and go to new highs. That's how it could be 2007. And on the weekend, we talked about how people might not believe it. I don't think people would believe it if we're going to go higher. So there's the breakdown. There's the recapture as of right now. We got to get through PCE and jobs on Thursday and Friday, but as of right now, it looks like it's a big. There's not a big question mark, but we have a question mark here. If we can hold the weekly and the monthly is giving us a big high time frame pattern, let's just make sure we're paying attention to that. It seems like really simple. The story is not all that complicated. Maybe you're finding it complicated, and if you're finding yourself on the wrong side of the tape, or you need something to laugh about, just be thankful you're not this guy in the image right here. Thank you to Liz for sharing that. I'm going to ask you for a huge favor, please, and thank you. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that, and I want to thank you ahead of time. All right. Pushing forward, we can note that in the last 1 week, the heat map doesn't look all that bad. What I want to see happening is notably that this starts changing more green on a 1 month or 30-day perspective. There's one other chart that I'm looking at specifically here. It's the largest stock in the entire market. It's Apple. And because it's back testing and curling, I call that the hook or the curl. It's curling right here, right? Curling where? Right around previous all-time highs. Why does this pattern matter? It's the biggest stock in the entire market. If we go here to, we go to no group. Whoops, what just happened here? Let's go back. It's the biggest block. It's the most important stock. If we look here at a 12-month chart or an annual chart, and let's just flip this here to arithmetic. So, whoa, Apple only go up. I just want to pay attention to the highs here. So here we got 2021 at 182.13, and we got 182.94. Looking at the numbers up here in the top. So if we get back above 183, that means that Apple is now back inside of blue sky territories, which means it could be dragging the market higher. But if it doesn't get there, I'm also paying attention to that. I don't want to be blindly bullish. This looks constructive. It's really close to last week's high. It's not quite that break yet. But the risk reward here looks pretty good. So Apple's a really big, important stock for me. In the last 30 days, is down by 7.5%, worth about 2.8 trillion right now. So lost that 3 trillion in value. And right now, we note that fear and greed, we went into briefly went into to fear. Now we're back inside of greed. But a month ago, we were in extreme greed. So we went extreme greed down to fear, dead cat bounce back up into neutral. This happens to correspond with the sentiment or the candle we're seeing here on the weekly chart. Apple has an inside bar, which means we're going to look at the NASDAQ versus S&P right now. So looking here at the weekly chart, let's just make sure we're on the right one here. Here we go. Let's go back to this one. And actually, let's spend a moment to think about this here because this is actually really important. If we look here at a line chart for QQQ, right, we're just overlaying an image over top, switching QQQ to a line chart. Man, okay, well, this is like a massive cup and handles. So as long as we keep holding that uptrend, where can we go? Higher, at the top of the wall of worry. These performance chasers are getting a little bit of a humbling. That always happens. And if we're going to start another cycle, all we got to do is go up and break to that new high. Hasn't happened yet here on QQQ, but some other ETFs have already done that, like XLK, which we can note here has already gone to that newer high, and VGT, which are just different ways of trying to measure the NASDAQ. If you look at NDX or the NASDAQ composite, it looks a lot more similar to QQQ, where this is like looking at SPX. If you're getting confused, it just means there's this area right here, which has not yet been tested, but that resistance has been met on other charts, like I mentioned, XLK, which is the spider managed ETF. So it's just the way that it's sliced and diced. We know we already made a new high here, and now we're digesting it. So this chart is going to hit resistance before a chart like QQQ. But the important part is that when we go to a simple chart, do the emotions line up here? Is the pattern of behavior we've been noticing that people who did not buy the bottom and were bearish down here are now suddenly getting really bullish and they got smoked because they're chasing performance? I think so. I think that's what these last 30 days kind of tell us. It's red almost everywhere. Lots of pain. We went into extreme greed. Man, those people got greedy and they got punished. So now the question is whether or not we're actually going to, again, break that inside bar, bullish or bearish. What's going to be important for me this week too is just people expect us to go down. So where are we likely going to go up? Well, not always, but probably going to go up. It's not a huge number here. Usually when it gets closer to 60, it's more accurate. 53 is still pretty strong. And we do have ticker requests for this week. So if you want your ticker covered on the weekend, I'm going to do those on Sundays now. Just go vote or go throw a thumbs up beside some of the stocks you want covered. Like here, if we want Palantir covered, just throw a thumbs up. And that way it signals the interest to me. Two more quick things here as an update to the weekend. I want to thank, this was Alex for sharing this today, and then also Matthew for just getting it ready for me. So thank you to both of you. But what this shows me here is the CPI comparing 1966 and starting at that moment in time and overlaying it with where we are now in 2023. So Jerome is scared from the ghost of Volcker. And this right here pretty much says that, hey, well, we're still tracking. We could go lower. And just look at the timing here. It's from 75 to 76, or roughly 1 year. What's that period? It's the period where the Fed could go sideways. So we've been comparing 2007 on the weekend, where we go up on interest rates. Then we go sideways for a year, starting in July of 2006, going to July of 2007. We go flat. We haven't even confirmed we're going sideways yet. Still one more hike expected to get to 5.25, and then sideways for a year. That would pretty much perfectly correspond with this. Down for one more year, get some false hope, and then inflation comes back, and oh my goodness, does it hurt? So that's what it looks like right now. This could be tracking for another 12 months. People expect a down week. There's been pain, but we're seeing some bullish signs on things like on Apple. And let's just go back here to our line chart. Let's just go back to the candlesticks because that's the one that I like to look at. If we also look here at QQQ on the one-day chart, this is where it's not quite the same as what we've been looking at. So we're looking at this this blue box where we come down to the moving average, to the uptrend. We bounce hard before, all the way up. We're bouncing it again here. The difference is that it's a relentless move higher. There's one red day until we hit a new high or the blue line here. So boop, right back up. Does not hesitate, just bounces, right? Hits it, bounces right off. It has a lot of support converging here. We have the golden cross. We have the 50 MA, the 200 MA. It got over both of those. slammed onto them, right? Crash, land, bounce. That same thing is not happening here. So we had the test on the 50. It held it for 1 day, and then boop, secondary leg lower. Now we're trying to bounce off the uptrend. We hit the 50 EDMA. Now we're backing off. What are we forming? That's how a W gets formed. So if we're able to hold here and break higher, meaning we get over that 50 EDMA, we start to invalidate the neckline here on the head and shoulders. And then we can run a test up to the relative high, which would be up here to roughly 390. That's how we can see that higher time frame chart turn into that massive cup and handle, but we have to go to new highs. Otherwise, it's not a cup and handle. So the story seems like really simple right now. Hopefully, you're able to follow along and understand what we're trying to show you, and really just make sure that you're not getting overly cocky one way or the other. There's lots of moving parts right now, and we're going to have more data when these weekly and monthly candle closes out. So if we go back here to SPY, look at the weekly chart because we want to pay attention to that one and the monthly. S&P has a double inside bar right now, which just means we're forming a coil, right? A pennant, a triangle. Why? We got higher lows and lower highs. So S&P right now is looking like those two inside bars. If we go to QQQ, here's where it gets a little bit different. So let's zoom in a little bit closer and let's have a look here and see what's going on. Because we pointed it out on Apple, we have the same pattern here where there is a bearish pattern. There is the head and shoulders. So we just look a little bit closer here, right? Shoulder, head, shoulder. We have the same area here at our neckline at roughly 375. However, do we have any progress being made here? We do. So we got a higher low and we have a higher high, but we close below it. So all that means is that we penetrated or made a new high versus before, which means that all the sellers who were willing to sell on the week of August 14th, they got washed out because we went higher. We didn't hold it, which means more people came in to ultimately sell. But at a certain period in time, the bulls did advance the chart. They didn't hold it. So the inside bar in this break is more meaningful, but it shows us that the bulls are at least testing to try to go to new highs. Are they going to do it? We're probably going to have to find out on Friday. And with that said, if you want to watch the weekend video now, keep up here on the left-hand side. That should give you the deeper thoughts that I had going into this week. And if not, I thank you so much for watching. And please just consider subscribing to the channel. Or if you want to join us for 14 free days, head to thealgo.com to trade with me, Justin from YouTube. I look forward to seeing you tomorrow. And thank you again.